In this video, we're going to recap the futures markets for a very eventful day. It is Thursday, July the 11th, 2024, guys. It is our trades back here with another video. I want to thank you for joining me. If you like this content, please make sure to like, comment, subscribe. That always helps me out in a big way, guys. We are working on getting to 2,000 subscribers, so tell all your friends. And guys, please make sure to use those affiliate links in the description box below. Apex Trader Funding, 80% off using the coupon link in the description box below. Okay, guys, so we are here and we are on TradingView, and I want to head over to an article here from Trading Economics, guys. So we had a big day today. The NASDAQ was down over 400 points. We're almost down 1% on the S&P 500. This article from Trading Economics lays it out. U.S. futures stabilize after tech-led sell-off. U.S. stock futures stabilized on Friday after the S&P 500 and NASDAQ Composite suffered their worst day since April amid a sell-off in mega-cap technology stocks. So that would be NVIDIA, Meta, Google, that sort of thing. In regular trading on Thursday, the S&P 500 and NASDAQ Composite plunged 0.88% and 1.95%, almost 2% there on the NASDAQ Composite, respectively, with both benchmarks breaking a 7-day winning streak and posting their worst losses since April 30th. On the other hand, the Dow inched up 0.08% and the Russell 2000 jumped 3.6%. Those moves came as investors took profits in high-flying mega-cap tech names and rotated into other areas of the market that stand to benefit from lower interest rates, including small-cap stocks. Sharp losses were seen from Apple, Microsoft, NVIDIA, Meta Platforms, and Tesla, almost down 10%, guys. Tesla down 8.4%. That's 8.4%. Fresh data showed both headline and core inflation rates fell more than expected to multi-year lows in June, prompting markets to price in an over 90% chance of a Fed rate cut in September. Okay, guys, so with that being said, we are back here on TradingView. Guys, we're going to have a look at starting with our stock indices. I do not want to bury the lead. Let's start with the micro NASDAQ, guys. If you are trading a prop firm account, this is probably the full-size NASDAQ, guys. I'm trading a live. I'm just trading my own money. So that's why it's set here on the NASDAQ. And let's head down to our 15-minute chart. And I want to talk about, what I was seeing in the market. Now, as many of you know, I typically sort of use ICT or Inner Circle Trader concepts, although I am familiar with other things. So let me first outline, what I would be seeing in this chart from an ICT perspective. Okay, guys, so during the regular trading hour session, the first thing that I would notice is, okay, we open up with a regular trading hours gap. So right here on the screen, notice that we opened up with a regular trading hours gap. So RTH gap. Right. I usually like to make these things kind of sort of light yellow. Let's see what my template. Okay, guys, so we have a regular trading hours gap. Let me make that a little bit of a darker yellow. Okay. So first thing that I would notice, guys, here on the 15-minute chart is notice that MNQ regular trading hours gap that the market came down and traded into, and we hit exactly that 50%. So exactly the midway point. It's kind of difficult for me to draw, but notice there's that 50%, guys. So came down to the 50% point of that regular trading hours gap, which came in that low at 20,703 evens. Notice that we bounced off of that. Now, if I were to see that on the chart, that regular trading hours gap, that'd be the first thing that I'd notice. I would immediately be looking for the market to target those nearest highs, which is what the market did. Okay, so here we have buy side liquidity, which we ended up running. So the market, notice that we formed that regular trading hours gap. I'm going to leave that on. We formed the regular trading hours gap. We then ran on that buy side liquidity. And now what I want to show you is, all right, so assuming that, what's the next thing you notice? Assuming that we are going to run on that immediate buy side liquidity. Well, guys, if I take a basic standard deviation projection, so what I did here is I took the high to the low just of our regular trading hours, and then I projected that higher using a simple Fibonacci tool, so a Fib retracement tool. So notice that the market, what it ended up doing is it came just shy of that 1.5 standard deviations, but notice that strong sort of unwillingness for the market to get above that 1 standard deviation point. So the market came down, market opened, we rallied up to 20,795 3/4. We ran on that immediate sell side liquidity, traded into that 50% of the regular trading hours gap. Now also notice, guys, what is this? That separation in the candles, and that right there is a breakaway gap on the 15-minute chart. Okay, so we have a breakaway gap here, and then notice that the market again makes another buy side imbalance, sell side inefficiency as we run above that prior high. At that point, if you're looking for sort of targets or where you might think the market is headed, I like to use the standard deviation projections. Notice that the market initially rejects that 1 standard deviation, and then, guys, we made that initial high there at 1445 New York local time, and then notice the market makes a second high here, and then notice the shape. One thing that I would draw your attention, although I can't say that you would know that the market is about to drop 400 points. I think that's a little ridiculous to know that the market's going to drop 400 points. You wouldn't know that. But notice right here the shape of that candle. So this is what we would call an inverted hammer candle or shooting star candle. Now, context is what's most important. Notice that it's coming as the second try higher. So notice that we made an initial high here at 20,895 evens. Then notice that shooting star candle or inverted hammer candle ran up into new all-time highs, and we formed that was our second push higher. Now the market, what it tends to like to do is it likes to form those 2 touches, 3 touches, but you can, again, that candle there was in context. So what were the next couple of 15-minute candles like? So the candle that would sort of draw my attention is, notice that the market, we ran on this short-term sell side liquidity here. All right, so we ran on that low located at 20,008. We ran on that. The market initially rejected it, tried to stay higher. That candle there at 10 o'clock New York local time, or at 9 o'clock, there's a fascinating candle right there. As the market plunged, the next thing I want to draw your attention to Notice that the market came down and we ran on that sell side liquidity there. So lots of different lows got ran today. And I wanted to show that to y'all. Let's go on the electronic trading hours briefly. Notice that the market came down and took out all of this sell side liquidity. That's something that I wanted to highlight, is our multiple lows getting run, basically. And then we came all the way up to this low that we formed on Friday, the 5th of July. And did we run that, or did we just make equal lows? Okay, we did run it barely by like a tick, by about a tick. So that's something that I wanted to mention. Okay, with that being said, guys, let me get back on the regular trading hour session and head over to Thursday's trading. Basically straight down, but what I wanted to bring your attention is that notice that it did run on multiple levels of sell side liquidity. Also, guys, I wanted to show you where there were a few traps that I saw during the day on Thursday. Market failed to rally here. It failed to rally again. Failed to rally here. Failed to rally again. And then finally, guys, notice that we did end up in a trading range here. So the market finally did calm down and come into what is about a 117 point trading range, which is something that I wanted to mention. But guys, one of the traps that, I don't want to say traps, but one of the items that, you know, probably messed up a lot of traders is thinking that each one of these small retraces was going to be a reversal in trend. This one actually could have made you some money if you would have managed your position correctly. Okay, guys, let's look at any other items here on the 15-minute chart from an ICT perspective. We are on the regular trading hours. In terms of our standard deviations lower, all right, so if I take a 15-minute chart from Wednesday, the 10th of July candles at 11 p.m., and I use the all-time high there from Wednesday, the 10th of July at 15:45, if I take a standard deviation projection, notice exactly that's where the market made a low, 1.5 standard deviation projections lower. So one of the items that I like to use is the standard deviation projection. And how you can manage to accomplish that is using a fib retracement tool, -5, -1. If you're on another charting platform, I'm pretty sure that there's a way that you can customize your fib retracement tool as well. But these are the basic settings that I use. And what is a standard deviation projection? Standard deviation projection is where you take a prior leg and then you project that lower or higher, basically a measured move. So we have a 1.5 measured move lower. And guys, it's pretty perfect. I mean, it's right there, perfect. So right there at 20,381 quarters, just basically perfect, guys. Basically right there is exactly where the market turned around. Okay, something that I wanted to mention as well here on the micro NASDAQ is obviously we had a large increase here in our average true range. We had a large increase in volatility. Now, guys, I've been talking about for a while how the market has had low ranges or low volatility. So we were due to have a day where the market really expanded its volatility. We reached ultimately here on the micro NASDAQ 56 points of range. Okay, guys, some of our other ICT items, patterns that we were forming during the day. This, as we move down, I just, some of the things that I would have been looking at. Okay. I'm going to call this here a breakaway gap. Breakaway gap there. All right, so I'm looking at that as a breakaway gap. I'm also going to keep my standard deviation projections. So 1.5 standard deviation projections lower. Also, look, we have a small old regular trading hours gap here. So notice that would be something that I'd want to pay attention to. Couple of fair value gaps that we should mark out. So obviously our breakaway gap is a fair value gap. As we move lower, fair value gap there. Let's see. Any other fair value gaps? Another fair value gap here on the way lower. Fair value gap on the way lower. And then regular trading hours gap here back between Wednesday and Friday of last week. The market came in and refilled that in. That is something that I would notice as well. I also talked about how, you know, look, there was going to end up being, look at all that price action there, all the liquidity that would have been below those lows. So sell side liquidity did get run there. I wanted to mention that. And then, yeah, finally, guys, so moving forward, I want to just talk here. I've been talking about 10 minutes here on the NASDAQ, and I want to talk about, all right, what am I seeing moving forward? Let's get back on the electronic trading hours, and let's get to the hourly chart. Okay, guys, so first thing, when I'm outlining for what I'm coming into tomorrow, sell side liquidity located at 20,361 evens. I would not be surprised if the market wanted to run on that. We also have notice to the left side, to the left here, if I just move my screen, the brush tool being my favorite tool, guys, notice that we do have market inefficiencies here. We also have sell side liquidity or relatively equal lows here at 20,205. So I'm going to mark that out as sell side liquidity. Now, there is an opportunity, I think, for the market to come back. From an hourly perspective, we are very inefficient to the upside, so I really would not be surprised if the market wanted to put in, you know, somewhat of a rally here in the overnight session. If the market is to rally, you know, what would I be looking at? I'd be looking at 20,554 up to 20,585. That is this fair value gap I'm highlighting here with the cursor. Another item I want to mention. You know, notice that we're forming something of a flag here or a pennant. So, you know, the market restricting its volatility. I personally think that the market's just going to have another leg lower. I think we're going to run below that low that we made intraday in the overnight session. So that low came in at 20,376 quarters. In my opinion, I think we're going to just drop below that. And then potentially, guys, what I think, you know, might happen here is we drop below that sell side liquidity into this old fair value gap and then have a little bit of a rally. So as it stands right now, what I'm seeing on the chart, I would think that the NASDAQ probably wants to move lower and then higher in the overnight session. Okay, guys, that has been my analysis of the NASDAQ here. Now I want to head over to the micro ES, get down to a 15-minute regular trading hour trading hours chart, and I want to talk about what I have been seeing since Wednesday. So since Wednesday. All right, guys, so we are here on the micro ES. We are set to New York local time at the bottom right. We're set to regular trading hours. I'm going to talk about the first thing I'm going to talk about here on the ES is what I saw, and then, you know, what I would have looked for during the day, and then I'm also going to talk about, you know, what I'm seeing moving forward. Okay, guys, so regular trading hours gap here, that would be the first thing that I notice. Now, the market has been basically, and this is kind of an interesting item. Notice that the market has basically been respecting that old regular trading hours gap, even as it came back down. Just something that I would have noticed. Okay, guys, so we opened up on Wednesday's trading, initially made a high here at 56.50 quarters. That would have been our set up for our buy side liquidity. That would have been set up for our buy side liquidity. And then, all right, market comes back down into that regular trading hours gap. Barely, what is that? The low there is 56.40 halves. I'm looking at the top left of the screen. The 11 o'clock candle here in the 15-minute chart 56.40 quarters. So we just ticked below our opening candle at 0930. So at 1100 on Wednesday, we formed something of what looks like a spinning top candle. And as the market, notice this nice 15-minute candle that I'm going to call a breakaway gap. So the market looks at that point like it's definitely going to run on that buy side liquidity. Now what we want to do, because we don't have price action on the left, we're at all-time highs, is we're going to take a standard deviation projection and notice that the market, all right, so taking a standard deviation projection, obviously in hindsight, you can see that the market reached the 1 and then the 2. It's probably like a 4 standard deviation projection move that we had on Wednesday. Next item that I want to notice is that, notice again, acceleration. So this is a fair value gap here, a buy side imbalance, sell side inefficiency at the 1215 candle. At that point, I'd be looking for the market just to accelerate to the upside. We then formed an upward facing channel. So I'm noticing that. So basically the ES had no stop on it on Wednesday, and we formed something of an upward channel. Now an upward channel tends to get broken out to the downside, but notice we got broken out to the upside and then the market came back down. Okay guys, notice this candle here, that's another fair value gap, but also just sort of blending our concepts. Exhaustion. So I'm going to call that an exhaustion bar. So right here, calling that candle there an exhaustion candle or exhaustion bar. Next candle, we have an inside bodied candle. At 0930 on Thursday, we open up, and we initially open up higher than when we closed on Wednesday. So notice that's Thursday's opening candle here. That's the 0930 candle. The market trades 5 points exactly higher. And then this, guys, you know, just taking it candle by candle, okay, just taking it candle by candle, notice the separation. Notice the separation. Breakaway gap. After context. After an extended move higher. Now, guys, one thing I think here to notice on the ES is notice that the market was inefficiently delivered all the way down here to 56.54. But notice this upward sloping candle, there's not really any technical support to be found. So if we take this upward sloping channel, no support. Okay, guys, so we have an upward sloping channel with no support to be found. So that when the market comes down into this upward sloping channel, it doesn't have an identifiable low that it can really rely off of. Now, notice that the market, as it came down to this fair value gap here, so we're looking now, I'm now looking at the 1045 to the 11 o'clock candle. Notice that as the market came down into that candle, look at that reaction. And guys, I know that a lot of people say, hey, ICT doesn't work. I've even said in the past, hey, ICT doesn't work. You just sometimes, guys, you see reactions from the market that are just like pretty on point. I don't know. It's kind of like maybe a confirmation bias thing. I don't know. But the point being is that if ICT had no idea what he was talking about, I mean, that's a pretty damn perfect reaction. Like, we look at the high of that candle, 56.54 halves, the low of that candle, 56.54 quarters. That's one candle off. That's exactly where the market had a reaction. It's difficult for me to say there's nothing to ICT sometimes when you just look at the regular trading hours gap, for example. Look at the way that the market appears to have respected that. Look at the way that the market just dipped into this regular trading hours gap. Look at the way that the market reacted off of this fair value gap. I showed you on the micro NASDAQ using a measured move, which ICT didn't come up with measured moves, frankly. But I don't know. Sometimes I just use his stuff and it can be remarkably accurate. That's all I'm saying. For everybody who calls him a scammer, maybe he is, but I don't know. The market seems to react off of his stuff. So there's a fair value gap there. Market reacts off of it and forms an order block. Then the market continues to go lower. And guys, what are we running on here? So notice the equal lows. So guys, notice when the market came in on Thursday, notice the equal lows here that we formed on Wednesday. So just notice the Wednesday opening candle, the Wednesday 11 o'clock candle. Notice those equal lows. Where's the liquidity going to be located? Well, it's going to be located below those equal lows, right? So that's something to have noticed. And then guys, notice here, we didn't quite make it there, but look at, I think this is an interesting item. Guys, look at all of the lows kind of clustered here. So we have a lot of lows below that 56.28 quarters level, which would lead me to believe that the S&P 500 or the ES is probably likely to dip down again lower. Okay, guys, and then finally, when the market came into about midday, it started to stabilize. We had an initial low at 56.33 halves. So we formed an initial low. Market rallied up into this sell side imbalance, buy side inefficiency, and so notice that the market came in exactly at the 25% point. So let's see, that high came in at 56.49 quarters. 25% of that sell side imbalance, buy side inefficiency, or that fair value gap there, came in at 56.49 half. So we're one tick off. The market then forms a second low. And guys, one item to show you that the market was probably at this point in time. So what do I mean by this point in time? Right here, notice that the market does not want to go much lower than the prior low. We again attempt to rally, form another low. Notice the market again, the low of the day comes in towards the end of the day or in the afternoon session at 56.29 3 quarters. Notice that again, the market does not really want to go much lower than that. We then have a rally. We rally up 17 points. So guys, 69 ticks. That's not a bad payday if you had a long there. Market then came back down as we closed and formed a higher low, which is an indication that we've entered into our trading range and that the downward momentum has stopped. Now, an item that I want to bring to y'all's attention here on the MES is, guys, it's a 20-point trading range exactly. So exactly 20-point trading range. Again, there are some items that when you see them, they make you think that, hey, the market appears to be algorithmically driven because, again, it just does these things that seem a little bit too computerized to be funny business. So, all right, guys, now I want to give you my thoughts on the micro ES kind of moving forward here. I'm getting rid of the prior drawings. Let's get back on the electronic trading hours. First thing I want to bring to your attention here during the overnight session on the ES is notice that we are forming a constricted range here. So our average true range in the overnight session is down to 4.3 points here on the micro ES. If I go to our hourly chart, where's our next set of liquidity? right there. There's some sell side liquidity and then buy side liquidity there. Guys, personally, I think that the market is going to want to take out that prior price action here. So the market has gotten hung up and found support on this prior price action, which is located here. I personally think what the ES is going to do, very similar to the NASDAQ, is I think we're just going to run on this sell side liquidity. And then I'll outline the other sell side liquidity. So guys, for the overnight session, I think that the micro ES is likely to trade below that 56.28 quarters. And then, you might see a little bit of a bounce like that. So that's sort of what I'm thinking. As we moved into the overnight session, we're forming a perfect here ISO triangle or symmetrical triangle. So this is not something that I would personally be trading right now. But with that being said, guys, we have a constriction of volatility here in the overnight session. Market not really fluctuating too much right at the moment, so nothing that I'd be trading at this very second. Sell side liquidity located at 56.28 quarters. We also have local sell side liquidity 56.29 3/4. Personally, I think that what the ES is more likely to do here in the overnight session for Friday is we're likely to come down, trade into this sell side liquidity, and then maybe get a little bit of a bounce. That's my immediate thoughts. Now, guys, moving into Friday's economic calendar, notice that Friday we have PPI and we have the Michigan Consumer Sentiment Preliminary. So we have news items coming out tomorrow on the here on the MES, which would lead me to believe that we're probably going to see not too much price action in the overnight session. Guys, not financial advice, but personally, I will not be trading until the regular trading hours tomorrow. But I wanted to go ahead and make this video, guys. This has been your analysis and your look ahead. It is Thursday, July the 11th, guys. Coming in on Friday's trading, we have the PPI and the Michigan Consumer Price Index. So we have news drivers tomorrow. So I don't think there's going to be a ton of volatility here in the overnight session. I'm just thinking sort of immediately, all right, we're probably going to move. We're probably going to run on that immediate sell side liquidity. That would be what I'm looking for in the overnight session. Okay, guys, this has been a bar by bar or candle by candle analysis of the NASDAQ and the ES futures. Let's finally have a look. I just want to take a brief look before I leave y'all at how crude oil did today. Crude oil closed Thursday's trading at 82.82, currently working in something of a constricted price range. Guys, one thing I want you to immediately notice on crude oil is notice that low average true range on the daily chart. So I think that crude oil, similar to the NASDAQ, I think that crude oil is about to have an expansion in volatility as volatility has contracted quite a bit. So that's something that I'm thinking about on crude oil. Okay, guys, this has been Our Trades back here with another video. If you like this content, please make sure to like, comment, subscribe. Use those affiliate links in the description box below. 80% off your Apex Trader funding evaluation.